Welcome back. Let's talk about currencies now. Manisha is now joining in. Manisha.
Thank you for that, Rima. Well, the dollar index is on screen because that really has been a conversation as well, right? 11% of a decline in the first half of 2025 has been clocked in already. Now, this is the biggest half-yearly decline that we've seen since 1973. So this is the first time in 50 years that the dollar index has seen such a decline in 6 months period. This also is the worst first half decline in any year that we've seen since 1991. So clearly, dollar index making a lot of records there, and all for wrong reasons. Well, to begin with, it is the dovish US Fed outlook that the markets have seen pressure come in from. It has been about Trump's proposal on tax and spending bill, which hasn't gone so well with the markets there. And then apart from that, the European institutional investors and pen funds, reserves, all of them really seem to be selling dollar treasuries and buying into their own and other currencies, even gold for that matter, and that hasn't done dollar any favor. When you look at the Chinese markets as well, they have stepped up the sale of US treasuries. So every central bank in that sense, especially in the Asian and the European market, seems to be selling dollar as the treasury and dollar treasury bills as well. That is the reason you've seen that decline coming in. The other factor really is about the US fiscal trajectory. When you look at those numbers, then the public deficit has exceeded 6.8% of GDP. And when you look at the federal debt, well, that is nearly 120% of GDP, standing at a tall $36 trillion there. And even when you look at 2025, the US isn't really servicing that debt. It is rolling it forward, and that doesn't augur well. Is the reason you've seen CFTC data also tell you that the speculative long positions when it comes to US dollar also are net shorts, the highest in 4 years. So nobody is buying US dollar or the dollar index, and that's clearly seen in case of prices there. So even as the dollar index is trading at around 4-year lows, and we've seen 11% decline in that, this is what the other currencies are done. These are the major currencies. The euro is trading at a 4-year highs, Singapore dollar at a 10-year highs, Swiss franc at 10.5-year highs. You have the pound sterling trading at a 3-year highs as well. And then you have various of these Asian currencies where you have the Korean won, 37-week highs, 6-month highs for the yuan, 2-week highs for the Japanese yen, 8-month highs for the New Zealand dollar as well. So we've seen stronger gains come in for many of these currencies there. When you look at the moves itself, well, dollar index, as I said, is down by 11%. But in contrary to that, you're looking at euro up by 13% in the first half versus the US dollar. The pound sterling has gained up by 9.5% versus the US dollar in the first half of this year itself. And then you have the high-yielding currencies, the commodity currencies. And as you can see, it has been a 6, 9 and a 13% of a gain that Swiss franc also has put out. So we've seen very, very strong gains come in for this one. The Chinese yuan is gained up by 2.5%, and the best of the gains, a 10-year high for Singapore dollar, comes in with a back of 7% of gains for this year until now. The Japanese yen is up by 9% as well. So clearly, anywhere between 3 to 13% of gains is what we've seen in many of these currencies. Korean won is up by 8%. You have Taiwanese dollar gaining up 11%. It's only the Indian rupee, while we've seen a huge volatile moves and a big swing move come in for the Indian rupee for the first half. But we seem to be closing the first half only with very, very minor declines there. So a very flat Indian rupee, but that is relative to a very strong other Asian currencies that we've seen versus the US dollar till time.
Thank you very much for that. And